Yo, what's good, guys? Welcome back to another video. Today I'm gonna teach y'all how to do the ICT silver bullet strategy. This is one of the most easiest strategies you could do in all of day trading. I mean, all you need is 1 hour in a day. I'm gonna teach y'all how to do it properly. All you guys need to do is just follow along and at least have the basics down when it comes to trading. I'm assuming you guys have the basics down. If you don't have the basics down, I'll be making a video on all the basics when it comes to trading. Every single thing from the beginning all the way to the end, everything. It'll probably be like a 30-minute video. But right now, this is for the people who know, what liquidity means, market structure shift means, and a fair value gap and whatnot. So let's jump right into it. And before this video starts, I want to let y'all know that this is not financial advice, and I by any means do not condone any live trading. If you guys are trying to copy my trades, if anything, copy it on a demo account, but be my guest if you do want to copy on a live account. Just do it on your own risk. All right. So let's start. By the way, this is bar replay mode. I did take this trade today. I made $1,000, 1,016, I think. It's on screen. So if y'all want some proof, there it is. Sorry I can't show my portfolio, but that's what I made today. You can check the date. Anyways, so what you'll need on the ICT Silver Bullet, I'm gonna link down a checklist that I put. You guys can see over here. I'm gonna link it in the description, and you guys can follow along using this. So basically, there are some tweaks. I used to do this on the 9:30 a.m., but this time I'm gonna show you guys on the 10 a.m. I stopped doing 9:30 since after the uh, when the time got sent back 1 hour, which is daylight savings time. I stopped trading the 9:30 a.m. I started trading 10 to 11. So I'll show you guys what that looks like right now. So if we go back to trading view, you're gonna go in the 1 hour time frame, and you're gonna grab your vertical lines, and you're gonna mark out 10 a.m. and mark out. Let me change the color of this. Mark out 10 a.m. and mark out 11 a.m. All right. So once you mark out 10 a.m. and 11 a.m., you're going to mark out the top or the high of 9 a.m., the highest point of 9 a.m. candle, which is over here. Mark this out and drag it out. The color, I'm going to change it real quick to dotted line. There we go. And the bottom of 9 a.m. as well. And drag it out, just like that. So it should look something like this. Now you're gonna come to the 1 minute time frame. And as you can see, it's been marked out right here. Okay, so this was the high of 9 a.m. and this was the low of 9 a.m. Almost reaching 10 a.m. in 1 minute, and we should see some price action when we continue. So let's continue. Right over here. All right. So as you can see, price got taken out, liquidity got taken out. So if we go back to our doc that we have, we can check out the time and check out the liquidity, because now liquidity got taken out. So we're on the market structure shift. As soon as buy side or sell side liquidity gets taken out, look for a market structure shift to the opposite direction. Drop down to the 1 minute time frame and annotate / mark out where the market structure shift has happened. So basically, we are going to look at the liquidity that has been taken out using the 1 minute time frame, obviously. And now we're going to look for a market structure shift. A market structure shift will come out eventually. It looks something like, if I had to draw it out, it looked something like this. This is a market structure shift right over here. And that's how it looks like. That's how it looks like. And you guys will see it right now. So if we just delete this and let this play on. All right. So as you can see over here, before it creates a market structure shift, you can tell that there has been a market structure already been formed. So this up here is called a market structure. We're gonna take this trend line we're just gonna point it out like this. This over here, this blue candle, is a market structure. It's a market structure because the candle after it did not make a new low, okay? It did not make a new low. The candle before it made a relative equal low, showing us weak signs that price will stop going down. Since it made a market structure, we're going to let it play on and look for a shift in the market or a break of structure now, okay? So let it play on. I'm so sorry for the slow time. I should have changed it before, but we can put it to 2x to be honest. 3x, yes. Right here. Okay. So now, what did price do? Price then made a swing low. Okay, there was a market structure. There was a fail to make a new low. It was fail. This is a relative equal low, meaning it's the same amount. It's just the same low. It's basically just the same low. All right. This just looks different because the body of the candle closed right here, and this one has a wick. Okay. It made a market structure, came down to make a swing low, then to make a swing high and break over this trend line over here. It broke over this market structure, making it a shift. So this blue candle over here exactly, this blue candle exactly over here, broke it. All right, let me grab the highlighter. As you can see, it broke it right here. It closed above it. Now it wouldn't count, it would not count at all if the candle's wick goes above the trend, the market structure. It does not count whatsoever. The actual body has to close so that it actually becomes a market structure shift. Otherwise, it just doesn't count. All right. Anyways, let's go back to our list and check this out. The second to last thing, guys, this is super easy. We're almost done. The second last thing we need to do is identify a fair value gap. So once we identify the market structure shift, we will then look for a fair value gap that has been left behind the market structure shift. Grab the rectangle tool and mark out the fair value gap. Okay? So a fair value gap is simply just a gap in the market showing us or telling us that there was no money, no volume was traded in that gap. No money was left behind, no money was sold, no money was bought. It was just running profits. Okay? It was running profits from either sell side or buy side. This is buy side though. We're going to grab a rectangle tool, and a fair value gap looks something like this. You're gonna grab the first candle, the top of the first candle, to the bottom of the third candle, and drag it out, just like this. That anywhere in between this rectangle is called a fair value gap. So as you can see, there was no wick, nothing wicked behind it, nothing wicked in front of this candle. It's always 3 consecutive candles that create a fair value gap. Now, if it looked something like this, if it looked something like this, you know, let's create that quickly. If it looked something like this would not be called a fair value gap, okay? This isn't a fair value gap because price, the market has already been traded between this candle in the middle here. A wick simply means, you guys should know the basics, a wick simply means that price used to be there. So money used to be there until people sold or bought, either or. Okay? This includes the institutions buying and selling, not just the people. So most of the market movement is from the institutions, of course, because they have the most money. Other than that, it's people as well that are basically forming liquidity, I guess, for us. But anyways, we're all technically liquidity from the institutions. But anyways, we're gonna keep going forward, and we're gonna see once price comes into it, and once price comes back into this box, what kind of shit line is this? I'm sorry, guys. Once the price comes into it, it should reject and go all the way up. Okay, that's what usually happens when candles hit the fair value gap. So we're gonna see right here. It's gonna run and run. There we go. Oh, that was way too fast. But as you can see, it came down, went up, came down, hit the fair value gap, and went straight up. It shot straight up right here. Okay. What we should do, get the long position. Let's say our entry was around over here, right? I like to put my stop loss under the newly formed liquidity usually, because I like to be safe in my trades. Because if I put it here, sometimes you can get stopped out, because sometimes it can wick under the box. So I'd like to put my stop loss just under here, and I would look to get around 10 to 20 handles, but for this one I'm gonna go around maybe 60 handles. That's what I went for today. I went around 60 handles, so it's quite a lot for sure. But when it comes to the silver bullet, you always want to look for 10 to 20 minimum. If you can't get that, if you can't see that if you're not confident in trying to get 10 to 20 handles, then just don't trade that day. But anyways, let's let this run through, and boom, there we go. Okay, so our TP was hit, take profit, and yeah, that's basically it. After 11 a.m. we can't trade, so it invalidates everything. But this netted me around $1,000 this morning, and yeah, and this was after news as well. It was a news morning. It was heavy news, to be honest. I was surprised I even made money, but I was doing an experiment. I just said YOLO, fuck it, let's just try. But yeah, that's basically it, guys. That is the ICT Silver Bullet Challenge, or Silver Bullet for your prop firm challenge. You guys can pass your prop firm. You guys can even obviously use this for your prop firm after you pass it for your live accounts. That's what I do. And yeah, that's basically it. So yeah.